Hello, people. How are you doing today? Can everyone hear me? That's good. That's good. So today, we'll start off by I'll answer a couple of questions again, wait for a few more people to join, and then we can get started on the chart work. Today we'll start looking at the RSI and support and resistance, because a lot of people draw support and resistance with just basically like a straight line, but support and resistance is actually an area rather than a straight line. Sorry. So we'll talk about that. Does anybody use support and resistance in regards to trading, or do they use the RSI for divergence? Anybody got any questions in particular at the moment as well? I'll get started properly in the next 2 minutes. Oh yeah, saw yours, Carl. We'll sort that out. Any more? Anybody use divergence, RSI divergence? Okay, support. Yeah, I'll go through them in a minute and just set the chart up. Generally, guys, I do the analysis. For me personally, I use a 4-hour time frame, but you guys that might want to use lower time frames, you might use an hour. Again, all the stuff that I show you can be used on any time frame. I'm just showing you the time frame that I actually use it on myself. But again, can be used on any time frame. Divergence works on any time frame. Also, I'll be showing you guys that as well. But let's get on what time frame. It works more. It doesn't work more accurate. It works on any time frame. Basically, it's up to you to do the test and see the likelihood, or sorry, the success of each time frame and see which one works best. I saw that you raised your hand, Jody. You got any question? You got a question? But first off, actually, should we start off with support and resistance or RSI? Support and resistance. Okay. All right then. So I'm not looking at the chat at the minute. I'm just mainly on the chart. So you'll have to. I'll start checking the chat again shortly. But you can all hear me fine, right? Okay. Well, I can see screen, but no. Can everybody else hear me apart from Jody? Perhaps you need to turn your audio up, Jody. But I should have the recording for you so you can probably watch it after. But I'm going to get started now. So first off, we'll start off with support and resistance. A lot of you guys may be drawing support and resistance with like a straight line. So let's find a clear example first. So for instance, support. So I'm using this blue horizontal line as my support as my support resistance lines. Can you see it clearly, or should I make it thicker? Wait there, probably can see it a bit easier now. You can see that better now, can't you? Okay, so right there. Again, a lot of people draw support resistance lines as just one line, but the problem with drawing it as a straight line, if you look to the right, it's only one particular price. So what support resistance actually is, it's actually an area. So if we go back now, let me remove this line. Say we go back to this level around here, you can see that If we look at candlestick formations, you can see that this is a bearish engulfing candlestick pattern. Remember, it's only the candlestick body that needs to engulf the previous candlestick. You don't need to engulf the wick. But we'll go on to candlesticks another day. But again, this is a bearish engulfing candlestick pattern. What some people may have done is they may have drawn the resistance level at the high of this area, or the high of this candlestick pattern, which is 1.1797910. Sorry. And as you can see, when price goes, when the chart goes across, price didn't even reach this level. So there was no way for you to capitalize on any kinds of support or resistance. What other people do as well is they sort of guess, or they want to say that they'll put it halfway. And if you put it halfway again, you're not even within your support resistance. You're not in your resistance level, and price didn't reach your resistance level, so you couldn't have got any opportunities. And then again, what some people do is to take it to the extreme, and they would have put their resistance line around about this level. And as you can see, price does eventually touch your level of resistance, but there's nothing clear to say that price could have went higher and could have found some more resistance within this level. As you can see, at this point, price surpassed the line even more than it surpassed at this level. And then price found resistance. It was a bit lower there and then found resistance. But now I'll show you the correct way to do it. Instead of drawing support and resistance as one straight line, you need to know that support and resistance is an area rather than a line. So support and resistance can never be a single price. That means that you can never draw support and resistance as a single line. Instead, what you do, and what I found based on my experience, is to draw your support and resistance based on reversal candlestick patterns. That's why I mentioned at the start this bearish engulfing candlestick pattern. So in this instance, as I'm going to highlight a level of resistance, I'm going to go to this pattern here. So now you can see I've marked out an area, and if I highlight this box, I'll make it a different color. So because it's resistance, I'll make it red. But now you can see that when we've drawn out, if you use the bearish engulfing candlestick pattern as your level of resistance, you can see that price retested this level here and price went down. It done the same here, went down. It nearly touched the price here. That's when, if you do a lot of back testing, and you see that it often happens that price nearly touches your level of support resistance, but misses it by, about 2 pips. It could be in your strategy that you may do the whole length, of the actual reversal candlestick pattern rather than just to the close. But for me, I like to do it to the close, as I've done the tests and I found that it works best like that. You don't have to do the same based on, depending on how you trade, it will give you, depending on how you trade will determine on the level of, or how wide you like to make your levels of support and resistance. As you can see that when price reached the level of resistance here, price was pushed back down. And the benefit of doing the support and resistance as an area is, that it's similar to Fibonacci, but we'll go into that another time as well. But it's similar because once price reaches this level, and like we did yesterday, we went onto lower time frames, like maybe on a 30-minute time frame, this area here could be a reversal pin bar, or it could be an engulfing pattern. At the minute, these two candles aren't a clear bearish reversal candlestick pattern, so I wouldn't advise on trading it. As you can see at this point here, price was pushed up, but as you can see, the resistance pushed price back down, and you've got a doji or a spinning top confirmed by a bearish engulfing candlestick pattern here, when you could have made potentially over 170 pips. So that's an example of resistance. I'm going to find another clear example of support, and I do exactly the same thing, because previously people may have drawn your level of support. So the first one we done was resistance, which was there. Now we're doing level of support. What some people would have done, say for example, we're at this stage here, and you may not know where to draw your level of support. Some people would have thought that you you make your horizontal line go through all as many points as possible. The problem with that is there's no consistency. And again, I did mention that you never have support and resistance as only one price. So what you do in this instance, the lowest point, which is here, and this is a bullish engulfing candlestick pattern. Put that here. So now we've marked out our level of support based upon the bullish engulfing candlestick pattern. I'll just highlight this now. Instead of red, I'll make this one green. So as you can see, when we've marked out this level, you can see that price does start retracing and falls within this level, but you can find the level of support within the level as you've got a pin bar or a bullish engulfing pattern again, and price does go up. So you could have potentially made nearly over 200 pips, depending on how long you held onto the trade. Just going to check the chat now. So if you've got any questions, I'm just in the chat right now, so you can send the question. Reverse seems to play out more. You make the Carl, in regards to how wide do you make the box, you make it as wide as the actual pattern. So I've given two examples here. In the first example, you can see this is a bearish engulfing candlestick pattern. I'll put the lower horizontal line at the close of the pattern and the upper horizontal line at the high of the pattern. In a bearish engulfing pattern, it takes two candlesticks. So I'm looking at this candlestick here, which is the green one, this bullish green candlestick, and then this red long bearish candlestick here. In regards to the level of support that I drew, that was based upon this bullish engulfing candlestick pattern. A bullish engulfing candlestick pattern consists of two candlesticks, being this long red candle here and the longer bullish candlestick. As you can see, it's fully engulfing. So far, do you understand that? Your reversal candlestick seem to play out more. Seth Hole, in regards to the time frame that your candlestick plays out in, I wouldn't advise trading candlestick patterns on a 1 minute chart, but depending on where you find the candlestick patterns, they do play out. That goes for all time frames actually. Just because you see a reversal candlestick pattern doesn't mean that you need to trade it everywhere you see it. A clear example of this is here. As you can look at these two candlesticks, you have got a green candlestick, but the green candlestick is getting fully engulfed by this red candlestick here. However, you're neither in a level of support or resistance, so you shouldn't have entered a sell position, so you wouldn't have taken the trade. So basically, when it comes to looking at candlesticks, you need to make sure that you take note of candlesticks within certain areas. If they're not within certain areas, then simply ignore the candlestick patterns. All that part explains itself. I'm just going to read. Russ said, what signs are we looking for within the levels of support? And what decisions do you make based on these? So let's go back to the chart. In your level of support, if you've marked out a level of support, i.e. buy, so support means buy. If you've marked out your level of support, which we did here, once price does enter your level of support, you're looking for some signs for you to buy. In that instance, if we're looking at candlestick patterns, you may be looking at a pin bar, which you have here, or a bullish engulfing pattern, which you've got here, or a morning star pattern. In regards to when you've got a level of resistance, you're looking for opportunities to sell. So you may be looking at bearish reversal candlestick patterns that happen within this area. So for instance, you've got this, what is it? You've got this, well, there's one here. You've got a bearish engulfing pattern here. You've got one here, bearish engulfing pattern here, another bearish engulfing here. Price didn't really touch your level there, so you shouldn't have taken that trade. That's not a clear candlestick pattern here. Well, it's not a clear pattern that I would use. But you do have a evening star here, as you have a doji star and the next consecutive candle being a bearish candle. So I hope that answers your question there. Carl, what do you mean by the width? Jody, you can take the level as many times that the price does respect that level. If price breaks that level, then that level can often become support or resistance. But I'll find an example of that as well. Uh, Stephen, you can enter when you spot the pattern, but ideally you take notice of specific patterns within certain areas. But at the minute, we're focusing on support and resistance. So when we start focusing on candlestick patterns, I'll go deeper into it. Yeah, that's basically it, Russ. That makes sense. Carl, I'll show these two examples again, then I'll find some more examples because I think that once we see some more examples, you'll get more familiar with it. I drew out these two levels, these two horizontal lines here, because if you notice, I've drawn, these two candlesticks here, 1 and 2. These two candlesticks together are bearish engulfing candlestick patterns. So in order for me to draw support or resistance, I like to draw it based on bearish or bullish candlestick reversal patterns. In this instance, we're looking at a bearish engulfing pattern. So I put the lower horizontal line at the close of the bearish engulfing pattern, and I put the upper horizontal line at the height of the bearish engulfing pattern. Now, when we go to this example here, you'll see that I put this blue line here at the height of the close of the bullish engulfing candlestick pattern, and I put the lower horizontal line at the low of the bullish engulfing candlestick pattern. So I hope that makes sense. But before I look in the chat, I'm going to find a few more examples, because hopefully when you see more examples, it will make more sense to you. I also need to find an example where support becomes resistance. Found the example here. It's a quick one. The reason I'm drawing at this level here now is because we have a bullish engulfing candlestick pattern. You draw to the close of the bullish engulfing candlestick pattern. That's where you put the upper horizontal line. I'll put the lower horizontal line at the low of the bullish engulfing candlestick pattern. I'll draw the box so you can see this area. And as you can see, what actually happened, price was continuing to trade above this level. Once price did reach this level on the 20th of the 4th at 4 o'clock, by this long pin bar, even because this is a 4-hour time frame, by this long pin bar, you can see that when price was pushed back down, there was a level of support and price was pushed back up, and it went back up at 46 pips. So price did try and find support here, but the sellers took control. Then eventually you'll see that price broke below your level of support that you drew out here. And what many of you know already is what was support can become resistance, and what was resistance can become support. So an example of that now, I drew out this level of support, but now once price broke below it, you can see that price. I'll just change it visually for you guys. Yeah, so you can see what was once support here. Price did find level of support as price was pushed up by the buyers. However, the sellers took over. Price broke below your level of support, and then it tried to push back. Price tried to push back up again. However, within your level of what was once support became resistance. Price could not go past this level basically, and what was once resistance became support. So you can see how I used the same level of support and it turned into a level of resistance. Another example. But let me just check the chat first. Adjusted certificate. Yeah, I'll give you one, Marvin. When you mentioned that you could have made 20%. Well, Bobby, you said when you mentioned that you could have made 200 pips, does that mean holding onto the trade for over 1 week? It does mean that. So, for example, because we're on a 4 hour time frame, 1 week does sound like a long period of time. But if you look between these dotted lines here, these these dotted lines, these dotted vertical lines, sorry, um, this represents 1 week. So it's not a long period of time. But because you guys are perhaps possibly trading like 1 hour charts or 5 minute charts, holding a trade for 1 week does sound like a long period of time. The longest I've held a trade for is 18 days, 18 trading days. So that worked out as it was quite a long time. Sefo, you said after price leaves your resistance area, where could one anticipate your exist? I'm wondering if you mean exit. Can you write that again, please? No worries, Carl. But you can ask again and I'll try and understand what you're saying. Oh, in regards to exit, Sefo, you asked me where you could expect to have your exit. Exit depends upon your trading strategy and your exit strategy. So again, people can focus on entries as entries are important to focus on. However, equally, trade exits and trade managements are equally as important as entries. So far, are you guys with me? Okay, that's good. Anybody not with me at the minute? Okay, I'll show one more example of each. I'm not going to explain too much, well, unless someone doesn't get it, I will. This is an example here. I'm just 1 second. So I'm going to do. I'll quickly go over. No, just ignore these lines here, guys. Just ignore them. I'm not going to delete them yet. So, for example, say we've seen this pattern here. This is a morning star pattern. Again, this is why yesterday and previously a couple of people have asked me if they should learn all about candlesticks. But as you can see, I only mentioned a few candlestick patterns which actually do work and which are solid trading signals. So now, this example here that I'm going to show, which is a morning star pattern. Again, I'm going to be drawing the level of support as an area rather than as a straight line. So I'm using the morning star pattern is these three candles here. You have this bearish candle, this red bearish candle, this inverted hammer, which is upside down pin bar, and this bullish candle. So a morning star pattern consists of three candles. In this instance, you put the upper horizontal line at the close of the third bullish candle. Well, the third candle in this instance is a bullish candle, and then you put the lower horizontal line at the lower of the pattern. So if regardless of the color, so if the green one's here, so I'm not going to only use the green one today, or in this example, you have to put you have to put the lower horizontal line at the low of the lowest point of the morning star candlestick pattern, which is the low of this red candlestick here. And now we mark out this area. Just change the color, make it green. And as you can see, you've marked out your level of support here already. You can imagine if price was pushed up, but then you can see that price is starting to retrace and you're wondering where price is likely to find the level of support. But because you've already drawn out your level of support, which is this area that we marked out with these two horizontal lines, and that the same area that I've put a green rectangle in, you can see that price dips into your area of support here. And then everybody knows this candlestick pattern. You have a pin bar or a hammer. This is a clear pin bar. And remember that pin bars and hammers are the same thing. But remember that a pin bar is defined as a candlestick with a lower candle, well, a longer candle wick, which is at least twice the length of the candle body. So there's a pin bar. If you entered on the pin bar here, and you could have either put your stop loss at the low of the pin bar or at the low of the support level, you could have made potentially over 340 pips. Another example, but once you enter this trade and you have this strong bullish candle, even though you entered on the pin bar, now you've got a bullish engulfing candlestick pattern. Remember, the bullish engulfing candlestick pattern just means that the bullish candlestick body, needs to fully engulf the previous bearish candlestick body, not the wick, just the body. So you could have entered again at this point here and made over 260 pips. So 300 pips at 260 pips is what you could have made from them examples there. I'm going to check the chat now. Jody, I'm showing this example now, but I don't actually trade support resistance, mainly because it takes a while for the setups to come. But however, when they do come, they are solid opportunities. But for me, I just needed to have more opportunities to trade. But the techniques that I've explained now and that I've shown now, I do occasionally use, but I don't use support resistance specifically. But again, everything that I'm showing does work in live markets, and I have used before. I'll just progress to something else. Ross said, do the support resistance areas remain the same until they eventually broken, so they could stay the same support resistance levels for a few days, for example? And the answer to that is yes. Your support resistance levels remain the same until, let's find an example. Okay, this is a good example. So previously, let's pretend that from this point, you haven't seen all this. So we're scrolling across. And we're going to draw the level of resistance now at this bearish engulfing candlestick pattern here. So you put the upper horizontal line at the high of the bearish engulfing candlestick pattern and the low horizontal line at the close of the bearish engulfing candlestick pattern, which is here. I'll just get this box now, make it pink. So this is going to answer your question now, Ross. You mentioned how long do you respect this level for, or how long do you have the level for? So we've marked out a level of resistance here. As you can see, price falls and it comes back up, then price falls again. You've got a bearish engulfing candlestick pattern here. So it is acting as a level of resistance, but price isn't falling heavily. And eventually, price reaches this level and breaks through your level of resistance. It finds a level of support here as when price pushed it down, the buyers push price back up. However, there's no clear candlestick pattern on a 4-hour time frame, but if you was to go to a lower time frame like we have done, and that many of you do, maybe on the 1 hour or the 30-minute or 50-minute or lower, at this point here, you may find a bullish reversal candlestick pattern, which may warrant you to enter the trade for a buy position where you could have potentially made around 80 pips. But now you can see that price entered your level of resistance, which was trying to act as support here. As you can see, price then went below your lower level. So once price is choppy and goes below your level and above your level, so it's no longer respecting it. You just simply delete this level, or remove it. And simply create a new level around this area. So you just pull it at the low, and you'd put your horizontal line somewhere else as well. But there's not a clear there's not a clear bullish reversal candlestick pattern. But in those instances, you can just simply make it wider than how you would have before, and then it would have worked. But I'm going to check the chat box now. Let's see this. Does that answer your question as well, Ross? No worries. Jody, I'm not really going to show my own, what's it called, strategy. And what I will do though is I'll show every single technical tool, how to use it properly, and then it helps you guys to develop your own strategy. But I can't just show my own strategy, sorry. I'm glad you understand, Jody. But here we go. Sometimes you change time frame. For me, based on my system, I don't change time frame. Um, but for these sort of entries, when you are using support resistance and when you are using trend lines as support resistance, like what we did yesterday, you can go to lower time frames, because remember, if you've marked out your level of support or resistance, even let me find a good example. Remember we marked out these levels. No, maybe. Yeah, say around this level here, even though we have a bearish engulfing candlestick pattern, perhaps on a 15-minute time frame, you may find a different or earlier bearish reversal candlestick pattern. So instead of entering down here, entering on a lower time frame often enables you to enter the market at a better price. So it's better for your risk reward. But so far, I think that have you guys all understood the support resistance? How do you support resistance? That's a good point, actually, Russ. 1 second. I'll show an example. Uh, just trying to find a clear example first. I think I've found it. It's Russ asked if you can use moving averages as part of your support resistance level, and hopefully an example that I've marked out should be able to show that. Would you look at that? You'd think that I planned it. Um, Remember we marked out this level here. I marked it out based upon the morning star. And then I mentioned this pin bar where you could have entered the market. Now we've got the 100 simple moving average that I've got in red. And as you can see, what we did yesterday as well, or if you guys haven't seen it, I can send you the recording. But if you check your WhatsApps, I have sent you the link to the recording. And I did mention how you can use your moving averages as a way of support resistance. So this would mean that you've got your 200 moving average also within your level of support that you drew out based upon this morning star. So you've got a pin bar which appears in your level of support, followed by the pin bar also touching your moving average. So Ross said if you can use your moving averages alongside support resistance. So I put the moving averages on here now, and I found an example where it worked and you guys saw it. So I hope that makes sense for us. No worries. Do you use multiple time frame analysis? Julian, I do use multiple time frame analysis, but I only go from daily chart to the 4-hour chart. Yeah, it was like I planned it, but I didn't. It's just that you asked me, and because I've done this so many times, I knew that it would likely be the 100 moving average that would touch it there. So it was a good example, sorry. And Julian, I use two time frames, being the daily time frame and the 4-hour time frame. So for people that are say for example, if you're trading like a 15-minute time frame, then I wouldn't say that looking at a weekly or a monthly time frame chart is any use to you, basically, because you're only looking at 15 minutes. Yeah, but I can get deep into that another time. But at the minute, does everyone understand how to properly draw support resistance? No problem, Julia. Is there any questions about support resistance? No questions about support resistance then? Okay, then that's fine. Everybody else understands it, I'm assuming. I'll quickly go back to the start so you can see how I drew that. You can see how I drew that one. You can see how I drew that one, and then what was once support became resistance. You can see how I drew this one, and then we found the pin bar, and we also had the moving average that happened within. And that's it at the minute. So now that you said you all understand it, I'm going to delete it, so that's fine. I don't use FX Pro for my live trading, no. I use FX Pro to show you guys that this is demo account. But the problem is, if I show you my live account, then it shows my account number as well, and I'm not allowed to do that. Plus, I've got money in there, my real money, and I don't want to potentially get hacked. Not saying you're going to hack it, Bobby, but I'm just not going to show my real one. But I hope you understand. I'm from Birmingham, but, you know. So now we'll move on again. So now everyone understands what's it called? Everyone understands the support and resistance. So now we're going to move on to the RSI. Charts. So now, let's check the chat. Any questions so far? Okay, so the next thing we're going to go on to is the RSI. So the RSI can be found when you press insert, indicators, down to oscillators, relative strength index, RSI. I'll have it as reset. So this is how it will appear when you guys put it on your chart. So as you can see, you got the blue line here. It's not very good. It's a period 14. I'm going to show you guys how I have it for myself. So right click, properties, change the period to 9. We're changing this blue line. I'll make it red. Levels 30, 70, 50. Press OK. I'll make the line a bit thicker for you guys. So now you can see that a lot better now. Can everyone see the RSI clearly? Okay. So now I'm going to show you how to do RSI divergence. Have a lot of you heard of that? Well, I should think that you have actually. But you can spot some divergence here already. I'm going to show you a very easy way how to spot divergence, and this will stop you from identifying divergence wrong. So now, firstly, we're going to look at bullish divergence. Bullish divergence means that you find it at lows. So when you're looking for bullish divergence, remember you're looking for divergence at lows and price at lows. In this instance, we're looking at these 2 points here. What divergence actually shows, it shows change in market strength. So we'll just highlight these points here. Because we're looking at bullish divergence, I'm going to make it green. So I'm looking at these 2 points here. Now, easiest way to draw divergence, and this is the only time I'd advise drawing a trend line this way. And remember, you're only drawing the trend line to help you identify divergence. This isn't how you draw a trend line to show you to determine uptrends or downtrend. This is simply for RSI divergence. I can't stress that enough. So now what you do in order to find divergence, the first low needs to be higher up than the next consecutive low. So the previous low needs to be higher than the next consecutive low. So that's this one here. And so this is the first low, and that's the second low. The second low needs to be higher than the first low. And what you do is, for bullish divergence, price, and all of this is price here. So all these candlesticks, this section of the screen is price. So the trend line on price needs to be sloping downwards to indicate RSI divergence bullish divergence. So we'll get the trend line now, and I'll draw it from this low to that low. Everyone can see that's a clear slope downwards, can't you? Let's check the chat. Everyone's with me at the minute when I'm showing this divergence? Okay, that's good. So yeah, we make sure that when you're looking for bullish divergence, the first low, this is low 1, needs to be higher up than low 2. This is low 2. And then when you get the trend line needs to be sloping downwards. Again, this is the only time you'd use a trend line for this, but I found that this is a perfect way to explain RSI divergence to everyone with ease. So once you've done your downtrend line here, the easiest thing to do is to get your vertical trend line, which is there. If you haven't got that, go by your mouse, by your cursor, right click, press customize, and then you'll find it. You'll find the vertical line and you can just insert it. So let me just show you. Say if it wasn't there, you see that it's gone. You just find it over here, press insert, and it's back there again. So close. So yeah, once you've done the first slope and you've highlighted it, you don't need to do this all the time, but this is the easiest way to explain it. All you do is you get the vertical line and you place the vertical line at the low point, which is there. But what you will find is that when you're looking for the divergence, the lowest point on the RSI will actually be on the bearish candle. That's because the RSI shows market strength, and obviously the RSI would think that the bearish candle is weaker, so it has a lower reading than the bullish candle. But for that purpose, so we'll put the vertical line at that point there. But you can have it there, but I'm just trying to show you, when you do find examples, you may be drawing your vertical line and you'll see that it ends up there, midpoint, and you may start panicking. Either way, you'll still be right here, but I'm just showing you. So the easiest thing to do is not panic and just draw it there. Then you get the second vertical line and you do the same thing. But again, because this is a strong bullish candle, you can see at that point, it's not bang on the low of the RSI. So if you just move it across and put it on the low. So everyone, just checking the chat. Is everyone with me at the minute? Okay. So now that we've drawn the sloping trend line on price, and you've drawn out the two vertical lines on price, it enables the vertical lines go down to your RSI as well. So all you do again is you get the trend line, and this is a good example because it's a blatant example, but as you get more experienced, it'll be harder to find. So you draw the trend line from the first point, which is here on this side, the first low on the RSI, to the second low on the RSI. And for bullish divergence, price, remember up here is price. The slope on the trend line on price needs to be sloping downwards, but the slope on the trend line on the RSI needs to be sloping upwards. That's how you identify bullish divergence. So is everyone with me? Everyone understand that? Okay. Any questions so far? Let me know if you got any questions so far. Okay. So now you've drawn out your basically, this is the key thing you should write down if you're wondering. The slope, the trend line slope on price needs to be sloping downwards, and the trend line slope on the RSI needs to be sloping upwards in order to show RSI bullish divergence. So that's an example of bullish divergence here. I'll also highlight the bottom here actually. Come to think of it. So that's bullish divergence. Now we'll show bearish divergence. So again, all you can do, to be honest with you, is if you're in a panic, and some people learn a bit different, and they're able to take on board bullish divergence easier than bearish divergence. But simply all you do is turn your laptop upside down and it looks how it should look. So I'll give you an example of what I mean right now. Now we're going to be looking at these two peaks here. It's the same, pretty much the same thing. But in this instance, the slope on price needs to be sloping upwards. So what I'll do, I'll highlight these 2 points. But for bearish divergence now, I'll make red at these 2 points. So remember, you get the trend line, and you always draw the trend line from the first high to the second high. The same way when you're looking for bullish divergence, you draw the trend line from the first low to the second low. But I'll do this now. So draw the trend line from that high to that high. And as you can see, this trend line slopes upwards. And then what you do next is you get the vertical line, pull it on the same point, on the high point of this area, and on the high point of this area. And as you can see, if we go down to the RSI and do the same thing, and then get the trend line, this trend line will slope downwards. So to recap, for the RSI bullish divergence, the slope on the trend line on price needs to slope downwards, but the slope on the trend line for RSI needs to slope upwards. And then if we go across to bearish divergence, the slope on the trend line on price, remember up here is price, needs to slope upwards, and the slope on the RSI needs to slope downwards. Does everyone understand that? Okay. Ross said, at which point would you take position if you get the right slope patterns? So now that we've got everyone understands how to actually identify bearish and bullish divergence, what you actually do, and divergence is something that I trade myself, but I trade it a lot more aggressively than this. I can find divergence in here. Again, I'm a more aggressive divergence trader. What is it now? Oh yeah. So this is where, let me show this first example first. So here we're looking now, and Ross said, how would you actually trade this? So what you do is, say for example, we are at this price here, and we don't know what is actually happening in the market, but price has made a low. We get the horizontal line, and this time, because there's too much blue, I'll make it red. So now this horizontal line that I've drawn here is red, and that's indicating the low at this point. Then price has gone up, but then price started falling again, and you're wondering where price is likely to find the level of support. So when price starts going down, you can see that sellers are in control again. But what the RSI actually represents is the strength of the sellers. So as you can see, when sellers push the price down here, the RSI is moving down strongly here. But as price was pushed up by a little bit of buyers, price went up slightly. But then, however, sellers pushed the price back down again. Sellers pushed the price back down, but this is how strong the move was. This long move here. This is how strong the sellers were pushing price down here. But in this move here, you can see that this is the low point of the RSI there, but the low point of the RSI at this point is only here. So even though sellers have pushed the price down lower, the sellers haven't got as much momentum or as much power or as much strength as the sellers did previously. So this is an early indication that price is likely to take a turn for the bullish side, mainly because the sellers don't have as much strength as they had previously here. So this is an early indication that price is likely to find the level of support. And then once you've got this level of indication around this level based on RSI divergence, for the bullish divergence, sorry, you've also got a bullish candlestick pattern which formed here. And if you entered at this level here, you could have potentially made over 280 pips, or if you held it to the top, 380. But realistically, you would have held it around this level. So does everyone understand that? Stephen, you can use the RSI divergence on lower time frames. It works. It's something that I use myself, and it works perfectly. As long as you train your eye to identify divergence and you actually understand what you're looking for in divergence, it works perfectly. And that's one of my textbooks. You can use it on smaller time frames, yes. You can use it on 5-minute time frame. Again, we'll go on a 5-minute time frame now. And as you can see, the RSI is a lot more reactive on the lower time frame. But as you can see here, you can see price. No, that's not a good example. Let me find a good example first. Yeah, you can see price made a low here, and the RSI made a low as sellers were pushing the price down. Had a lot of strength, so the lowest part was here. But then as price made a lower low, which is here, as in if we drew the trend line, it would be sloping downwards. However, if we drew a trend line on the RSI, it would be sloping upwards. This is a sign of bullish divergence, and you could have potentially got in early and made around 30 pips. On a lower time frame, you get lower amount of pips, but it's a good example to show. No worries, Stephen. And no worries, Russ. Has anyone got any questions regarding this? So do you guys understand RSI divergence now? Okay. It'd be good if you could. That's good. Yeah, so moving on actually. I was gonna say how we could make sure that you guys progress a lot better is if you find examples of RSI divergence in your own time and print screen your charts and then send it to me in an email. I'll WhatsApp you my email address to send it to, and then we can go through some of your guys' analysis. Again, the more practice you do, the better, as it helps you to further improve your trading. The more practice, the better. It trains your eyes and enables you to identify opportunities a lot better. So is there any more questions at the minute? Has anyone got any questions? Any questions, people? Take it as, oh, Zidane's got a question. The line of the middle of the RSI is the 50 level, and that's just, you don't need it there yourself, but I like to have it there because, again, I'm a more aggressive RSI divergence trader, and I need it there. But it's quite too advanced to show right now and to explain, but we'll probably go on to that at another stage, or if you ask me personally. Zidane asked if I could show you guys a way that you could trail your stop loss for trailing profits. And there's many ways that you can use to trail profits actually, but I'll show you a quick example right now. Because I know that a lot of you guys have problems with trading profits. The easiest way right now that you can test for yourself is an indicator called the parabolic SAR. The results may vary, and I don't use it. I used to use it, but I don't use it myself anymore as I've got a different method for using it, and it works out better than using the parabolic SAR. However, because Zidane asked me if there's any methods that you can quickly trail profits, I'm going to show that now. So indicators, so insert indicators, trend, parabolic SAR. And when you first apply it to the chart, it will look like this. If you look a bit clearer, I'll zoom in a bit. you can very faintly see these green dotted lines or green dot circles. Sorry, you right click on them. SAR properties. Instead of lime, I have it black, and instead of this, this changes the thickness of the dots, so you can make it thicker. Press OK, and as you can see now, you've got the dots on the chart. I'll just zoom out a little, a bit more in. And the way you trade your profit, for instance, if you enter the market at this price here, and because a lot of people sometimes don't know when to take profit, if you basically trade your stop loss according to where the dot is, so as each new dot is formed, you move your stop loss to that dot. So you go like this, move your stop loss to that price there, then you move your stop loss to this price, then this price, there, and so on, until you eventually have your stop loss here, but then price eventually stops you out, and then you basically cash out your profits from your entry price to your stop loss price, which is 60 pips. So that's one example. That's an example of how you can use the parabolic SAR as a method of trading profits. You can use it on any time frame. An example again is if you was to enter the market at this price here. So if you was to enter the market at that price here and you weren't sure where to put your stop loss, you could basically move your stop loss according to where each dot was. So as a new dot's formed, you move your stop loss to the dot, and then you're locking profits. You can see that as price made a little retracement, because you gave the trade enough breathing space, enough breathing room, you was able to wait and make the price surpass that previous level, and eventually you would have had your stop loss at this dotted line, this dot here, and price would have stopped you out. So you could have potentially made over 139 pips. That's when you use the parabolic SAR as a method of a stop loss. It's not the best example. It's not the best for your exit strategy, but it's better than not having an exit strategy. So let's check the chat. Yeah, locking in profits is a very key factor, because again, a lot of people focus on just simply entering the trade, but they don't have a plan on how you can manage the trade or lock in profits. But there is obviously bad points to using the parabolic SAR as a method of trading profits, as sometimes it moves too slow or it doesn't lock in enough profit. So that's why I don't use it myself. But again, it's better than not having the method at all. So I hope that helps, Zidane. Any more questions, people? No worries, Zidane. So no more questions. If you got any, you can leave them in the chat box now. Also, while you guys are still there, I'm thinking we're on Tuesday now. On possibly Thursday or Friday, it would be good if all you guys could simply, take print screens of your charts, clearly showing me the problem that you're having on the chart, and I'll go through everybody's problem and solve it live on the screen with you guys now. Because basically, any problem that you have, I'm sure that I can help you out with it, and I won't have any issue helping you with it. So I'm thinking, I haven't decided the day yet, but if you guys can all basically find your problem on the chart, label the chart clearly so I can see it, and then print screen your problems and send me the email. I'll go through each problem. I won't mention your name or anything, but I'll tell each person I'll solve each problem live on the charts or live in the session and find the solution to all your guys' problems. So I hope that helps. That will be on either Thursday or Friday, but I haven't decided just yet. It was just a thought that I had earlier today. No worries. So I guess that everyone's understands support resistance a lot more now. So remember, support resistance is never just a straight line or never one line. It's actually an area. Also, I showed you a very easy way of how you can do RSI divergence, whether it be bullish divergence or bearish divergence. So I hope you guys understand that as well. But no worries, Bobby. So there's no more questions now. Has anyone got any more questions? All right then. So good session today then, guys. Remember, it will be either Thursday or Friday where I'll be going through everyone's problems that they have. As long as it's a question to do with technicals, uh, I'll guarantee I'll be able to find you a solution, and I'll go through them. So I hope this session was helpful for you guys, and you can talk to me on WhatsApp. Again, if I take a while to reply on WhatsApp, don't think I'm being arrogant or anything. I just get quite busy because I'm trading my own account throughout the day as well. But I do get back to you within at least 24 hours. So hope to talk to you on there as well. Hope you had a good session, and I'll speak to you again tomorrow. I'll be online tomorrow at about 9 o'clock. I was a bit busy today, so I had to do 9:30, but 9 o'clock will be fine. All right, then, guys. Have a good day.